Hello, this is Craig Hammer with Prosperity Partners Wealth Management in Knoxville. Today I would like to talk with you briefly about the CARES Act and taxes. The CARES Act was signed into law March 27th of 2020 with the goal of easing the financial burden on taxpayers. Now that tax season has actually begun, many people are being surprised by some of the information contained in their tax notifications. Let's look at two scenarios and what we can do to prevent overpayment of taxes on the federal level. First, RMD rollbacks are not taxable. The CARES Act provided an opportunity for people to skip their required minimum distributions for 2020. However, some people had already taken their RMDs by the time the legislation had passed. On June 23rd, the IRS announced that anyone who had already taken an RMD had the opportunity to roll those monies back into their retirement plans via the CARES Act RMD waiver. So if you took an RMD in 2020 and put some or all of the money back into your retirement accounts, you will receive a 1099-R for the distributions. You will also receive Form 5498 in May of 2021, showing the money going back into the retirement account. Well, obviously this is after the tax filing deadline of April the 15th, unless you file for an extension. So what do you need to do in order to complete your taxes by April the 15th? First, line 4A of the 1040 should reflect all your distributions from your IRAs. Line 4B should only include the information or the money that was not put back into the IRAs, the taxable amount. So if you put all your RMDs back into the account, that number would be 0. Also include the word rollover next to line 4B. I would also suggest that you provide your tax preparer with a copy of the statement showing your money's going back into the IRA account for documentation purposes. Now let's talk about CRDs, or coronavirus related distributions. Under this provision, people could draw upon their IRAs or their retirement accounts up to $100,000 and avoid the 10% early withdrawal penalty. You also have the opportunity to spread that tax liability out over 3 years equally. Those that took a CRD in 2020 will need to file Form 8915E to report the distribution and get relief from the 10% penalty. A person also has the opportunity to opt out of spreading that tax liability out over 3 years. Perhaps it was a very low income year for some people and they want to just go ahead and pay all the taxes. You can do this by checking the box on line 17 of that same form. We hope you find this information valuable. Feel free to share this video with friends, family members, co-workers, anyone that might have some questions about the CARES Act and taxes. Also, feel free to give me a call at the office, 865-690-0049. Take care, and we hope to talk with you soon.